Hello friends, welcome back to Striving Aspirants. Today we are going to see what are the important steps involved in an accounting process, without which we can't proceed our accounting entry or accounting process in a correct manner. One of the most important thing to record an accounting transaction is the source document, without which we can't proceed to enter an accounting transaction. So, source document is the first important thing in the steps of accounting process. Let's see one example. We are going to buy a computer. So, the dealer gives a cash memo and we are paying the cash in accordance with that one. So, the cash memo, that is the source document that the dealer has sold this computer from his firm, and the particular guy received the computer by paying the particular amount of cash. So, cash memo is the source document. We have another source documents in the business transactions like invoice. There will be purchase invoice, there will be sales invoice, then pay in slip, check, salary slip. We will be having certain vouchers like receipt voucher, payment voucher. So these all are source document that will help to enter the accounting transaction. And in the case of petty expense, we will be preparing petty cash payment voucher. After we have got the source document in our hand, in our table, we will proceed to the journal. So what is a journal actually? The book in which the transaction is recorded for the first time is called journal or book of original entry. So with the help of source document, we will proceed to enter the transaction in the journal one by one. Means whatever transactions are taking place in a firm in a day, according to which we will enter all the transactions. So journal is the basic book of original entry. So in this book, transactions are recorded in a chronological order as per the date and as and when they take place. So after entering all these transactions, then it is posted to respective accounts. So the process of recording transaction in journal is called generalizing. There are different type of journals for the convenience. So that will include like journal proper, purchase return journal book, purchases journal book. So all these the companies are using according to their convenience and according to their bulk of transactions. Let's see the format of journal. We have date, then particulars, then ledger folio, then debit amount and credit amount. So in the date column we will give the respective date, and in the particulars column, by referring to source document like there will be some invoice like purchase invoice, sales invoice. So by referring to that source documents, we will write the entry, journal entry here. There will be one account will be debit and one account will be credit. And in the ledger folio, that is for like reference number, that is for our reference number, and the debit amount and credit amount we will give in the respective columns. Let's see one example related to journal. Goods purchased on credit for rupees 30,000. So we have given the date and we are entering the entry purchases account debit to best traders, purchase goods in trade from best traders, and the corresponding amount we have given in the debit amount column and in the credit amount column. After that, we have to put one line and close that transaction. After that, we will enter the next transaction, and after entering all the transaction, we will balance the total amount in the bottom. Let's see another journal entry. This is a compound journal entry. Here we can see one entry like office furniture account we have purchased. We have given cash and 20,000 worth amount is for credit. So we can see the entry like office furniture account debit to cash account to allied furniture account. After entering all the entries in journal, we will then go to ledger. Ledger is the principal book of accounting system. It contains different accounts where transactions relating to that account are recorded. So, transaction relating to particular accounts, for example, cash account related transaction, cash payments, cash receipts, cash purchases, cash sales. So, in cash account, we will be only concentrating on cash related transactions. Other example will be purchase account, all type of purchase, all type of sales, credit purchase, credit sales, all this we will record in that respective account. So, this is related to ledger. So, what is the important utility of ledger? The net result of all transactions in respect of a particular account on a given date can be ascertained only from ledger. For example, management need to know about the amount due from certain customers, or management need to know that whatever amount we have to pay to the particular suppliers. Such information can be found referring to that particular account, that particular ledger. So, referring to that particular customer's account, referring to that particular supplier account, company management can understand what is the position of that particular account. So, this is the format of a ledger. Left side is the debit side and right side is the credit side. You can see the date, particulars, journal folio column, then amount. And similarly in the credit side also we can see the same like date, particulars, journal folio and the amount. Now, after closing all the ledgers, the important thing we have to prepare is the trial balance. It is the balances of all the ledger accounts. So, whatever ledger accounts we have prepared by referring to the journal, so all that particular account balances after closing will be carried to trial balance. So, trial balance is a statement showing the balances or total of debits and credits of all the accounts in the ledger, with a view to verify the arithmetical accuracy of posting into the ledger accounts. So, the most important thing related to trial balance is to check whether all the amounts are correct. That is the one of the important objective of preparing trial balance. After that, another objective is this will help to prepare the financial statements. If there is any mistake in trial balance, we can't proceed to prepare financial statements. So, if there is any mistake in trial balance, then we can ascertain that there will be some sort of mistake in the ledger. So that will affect the journal also. So we have to return back to the journal to recheck regarding the mistakes. So this is the format of trial balance. In this example, in this format, I have only given 2, 3 or 4 examples. We will be looking to the trial balance in the coming videos in a better way. So this is like, for example, like capital is given, capital is having, capital account is having credit balance, plant and machinery debit balance, purchases will be having debit balance, sales will be having credit balance. So after entering all the account balances, we have to total the debit balance and credit balance, and that should be equal. If that is not equal, we can ascertain that there will be a mistake. So the objective of preparing trial balance we have already seen. One is arithmetical accuracy. Another thing is preparation of financial statements that include profit and loss account and balance sheet. Next one is trading and profit and loss account. So after preparation of trial balance, then we will go to the financial statements. And one of the important financial statement is trading and profit and loss account. This is prepared to determine the profit earned or loss sustained by the business enterprise during the accounting period. So by preparing this account, we are going to ascertain the company is having the sufficient revenue, sufficient profit, or if the expense is more than the revenue, so that will be a loss. So the main intention of this account is to ascertain whether the company earned a profit or incurred a loss. So let's see the format of a trading and profit and loss account. So we can see in the first part, the expenses are shown in the debit side, left side, and the credit side we can see the revenue or gains. The first part is the trading account. This is completely related to the what we can say like expense related to the manufacturing unit and whatever things respect to the all the purchases and the expense incurred to bring the materials to the manufacturing unit. So all these items, all this expense is shown in the left side, and in the credit side we have to show the sales. And in the second part, after closing this trading account, we have to show the indirect expense. The first part we are showing the direct expense like wages, carriage inwards, freight inwards, etc. And in the second part, these are the indirect expense. Mainly we can say the expense related to office. So this include rent, rates and tax, salaries, repairs and renewals, bad debts, and there are varieties of indirect expense that we can ascertain according to a particular company. So we have to enter indirect expense in the second part, and whatever gross profit after ascertaining, we can enter in the credit side. Here we can also enter if there is any indirect income like commission, something we have received, we can enter in the credit side. So this is the format of a trading and profit and loss account. Now the second and important financial statement is the balance sheet. It is the statement prepared for showing the financial position of business, and here we are summarizing whatever assets and whatever liabilities the company is having in the end of a particular accounting period. So the asset reflects debit balance and liabilities including capital reflects the credit balances. So in another manner we can say the balance sheet is a statement of balance of ledger accounts that have not been transferred to trading and profit and loss account. So whatever items that is not transferred to trading and profit and loss account will be carried forward to the next year with the help of opening entry made in the journal at the beginning of next year. So whatever things that is not considered in that profit and loss account will be carried to the balance sheet. So whatever profit or whatever loss that will be carried to the balance sheet, and moreover whatever assets and whatever liabilities this company is having in the end of an accounting period, that also will be shown. So this is a simple format of a balance sheet. You can see in the liability side you have given capital and add profit if there is a profit to the company, otherwise the loss amount will be shown. Then if the company is having long term loans, short term loans, then the sundry creditors or the suppliers balances that we have to show, and the bills payable, bank overdraft amount if available in the company. We have taken some overdraft amount from banks or something like that, we have to show in the liability side. And similarly in the asset side, right side, we have to show whatever plant and machinery, whatever assets, fixed assets, other liquid assets, current assets, we have to show in the right side, in the asset side. So these are the various steps involved in an accounting process. I believe that you have got a summarized idea regarding the steps involved in an accounting process. We will be going deep in the coming videos related to journal, ledger. We will be giving a detailed view with examples in the upcoming videos. For that time, this is signing out from Striving Aspirants. Thank you for watching this video.